Hello guys, today is Tuesday. I will try to continue making some videos because I was lazy this 2 weeks before. I was so lazy. Okay, so one question I get from one of my subscribers is telling me, what are the expenses of trading stocks? Okay, what are the expenses? Now, since I told you always, think of trading, it's a business. It's not just you open an account and you begin to trade, you lose here and then you win here, and you don't worry a lot, you trade. At the end of the year, either you make a little money or you lose money. So this is not a business. What you are doing, you are careless. Okay? So you are not doing really a business. You are entertaining yourself. Okay? What does it mean, entertaining yourself? It's just you see, oh, this is a good stock, let's buy it. Let's see tomorrow what will happen. Okay, tomorrow you have $50. Okay, sell it. Good. Next day, you do another trade. Okay, you lose $100. Oh, okay. Let's go to the following day. Maybe it goes up. You lose $300. Oh, okay. You sell the stock, and it's like this. So you don't know what you are doing. You have no strategy. You have no rules, no plan of the trade. You don't know what you are doing. You go online and you take a technique from here. You take strategy from here. You read the book here, and you mix everything. You mix investing with day trading, with with scalping, with short selling, with commodities, with I don't know. You just go online and you find techniques and you apply them. Okay? So where are you heading? You are heading to a catastrophe. I'm telling you. Okay? So what you should do, in order to make the business, you should control your expenses. This is like in real life, like in business. Okay? Let's say you are making, just an example, you are making $2,000 a month. Hourly or salary, it doesn't matter. Okay? You should control what your expenses. Something they are very, very important, you can't avoid. Okay? Like rent, electricity, internet, cell phone, okay, gas. That's war, something that you can't avoid. Food, clothes, okay. These things you can't avoid because you should eat, you should wear something, you should have where to live. There are expenses. These are expenses. Okay, expenses. Now, in trading, what are the expenses? The most important expense is commission. Is the middleman, is your broker. Now you open an account. Why you open an account? Because you can't reach the market by yourself. So there should be a middleman. Who is this middleman? Is your broker. Now your broker, what is his business? His business is to take commissions from you when you trade. So when you trade a lot, he will be happy. Now when you make money or you lose money, he doesn't care. Okay? This is business. If you trade 100 times a day, you buy 100 stocks, you sell 100 stocks a day. For example, you have too much money and you play in the market as you like. So for him, he will be very, very happy that you trade too much. Because he will get more commission, and more commission, he will get more money, and his business is good. Now, so what you should do about the commission? You should find a broker that doesn't ask you too much in a commission to pay in a commission. Now, for me, for example, now this was before, because when you for my broker, when you get a commission, you will stay with it even if the price change in the future. You have the commission that you have. My commission is $3.95. Okay. Now, but my broker now is $4.75. Okay. Now, I have seen some people who have brokers who spend 9.9 $1.99 for a transaction. I tell him, are you crazy? If you pay $10 to buy, you sell with $10. You get ripped off with $20 in each trade. It means when you buy and you sell. What's this? What are you doing? If you do one trade, if you do 100 trade in a year, do you know how much it will cost you? $2,000. For example, you buy 50 trades and you sell 50 trades. This is 100 trades all. Do you know 100 trades by 20? By 10 it is 1,000. By 20, for example, you do 100. You will spend $2,000. If you have $5,000 or $7,000 or $10,000, if you lose 1,000, 2,000, 3,000 from commission, where are you going? Even if you make a profit that year, you will see a loss at the end of the year. Why? Because of commission. A lot of people, they don't even see how much they pay for commission. Now, a lot of people, especially those who come to become my students, the first thing I ask, do you have a broker? You say, yes. How much you pay? $7. Change your broker. Go with me. Okay? I am paying $3.95, but you should pay $4.75, and they will give you 100 free commissions. It's like $475. Now, what is the aim? Why I ask people to change from their broker to my broker? It's not because I am making money or this. Yes, I have a referral friend. They gave me 30 trades for free. So I win as you win. But for me, it's not this. For me, it's a part of your education. I will educate you to become better in everything. The first thing you should think of, what is the first expense? Is commission. So you should cut this commission by half. I have seen people who tell me 7. Some they told me 6, some they told me 9, some they told me 8. It depends on the broker. So this is their price. Now for you, why you accept their price? It's just a commission. When you buy in my broker or in their broker or another broker, it's the same thing. All they are linked to the market, and what you see is what you get. So it's not because they say, oh, it's a powerful platform, it will give you the best. What is the best? You see the bid and the ask, that's it. So stop making people, those brokers want to hypnotize you. You don't see the truth because they know that you don't know a lot of things about trading. These brokers, they just pay to get the streaming of this bid. Okay? The people who don't pay, okay, you don't have the bid. Okay? So you should have the bid and the ask in order to buy or sell. You should see it because you can't buy and sell without seeing the bid and the ask. Okay? Now this is one thing. Now there is a second expense for some people who buy low volume stocks. You know, when you buy low volume stock, what does it mean? It means you find a stock that it is either small or big. I'm not explaining about penny stocks. Any stock. Let's say a stock, it is $50. It's a big stock. But you see volume, it is 50,000 shares traded daily. What does it mean this? It means when you see the low volume, you go to the bid and ask, you find it is so wide. You find, for example, 50 is the bid. You find 50, 5 cents. You don't find 50 here, the bid, and the ask you find 1 cent. You find 5 cents, 10 cents, 25 cents. Okay? Some I see you can find $1 between the bid and the ask. Why? Because you find the volume is 5,000. Now why these stocks have low volume? Because no traders come to trade in this stock because they don't like it. It's not volatile, it doesn't go up very quick, it doesn't go down very quick. So it's not volatile, so some people they don't like it. That's why the traders, they want, especially the professional traders, day trading, they like active stocks. that goes so high in the day, or it can go down so fast. So they can make money when they go long or when they short in the same day. Okay? So what do we say? We say the first expense that you have, the biggest expense, is commission. Second is what we call slippage, the difference between the bid and ask. That's why for me, most of the time, I try to see 1 cent bid and ask difference. For example, if the stock is $60, I want to see the ask is 61 cents. If the stock is $10, I want to see the bid $10 and the ask is $10 1 cent. Always 1 cent. Sometimes I have like a few cents more, but I like the stock. I want to buy it. Even there is a slippage, which is bid and ask wide. It's wide, so I spend more money on it, but I like the stock. I want to buy it because I calculate the risk. So whenever you have the bid and ask, it is wide, you are losing more money. For example, I will give you an example. If you can try it, if you are using these low volume stocks, okay? If you buy stock, let's say $1, this is the bid. The ask is $1.10. Okay, 10 cents. Now, if you buy 100 shares of this stock, it's $1. How much you lose from the bid and ask, which is slippage? How much you lose? You lose $10. It's 10%, because from $1, the bid, to the ask, which is $1.10, it's 10% of the money. So you are losing 10% of your money, and you see it when just you buy. You see it in your platform. You lose with red $10. Plus maybe the commission, which is $5, you will see $15 loss. And you ask yourself, why I just bought the stock and I see $15 loss? It's just because of the commission and because of the slippage. Because if you want to sell, you will not sell with $1.10. You will sell by the bid, which is $1. So you buy a stock with $1, $10, and you sell it with $1 if you want to sell, for example. So you are losing $10. This is called slippage expense. Now this is the most important one. Now there are some people who have fees. I don't know why. For example, they try to pay for news. Man, news are free. So why you pay for them? Do you think that you are better than a hedge fund? Do you get the news before him? No. It's impossible. Because he can pay more to get whatever he wants. At least before you. Okay? And even if you get news, even if it is good news, you buy, but the stock later it goes down. So it's not something like it's automatic, like cause and effect. No. In trading, that's why trading is difficult. It is not. Don't make like logical things in trading, because sometimes good news and you see the stock go down. Sometimes it's bad news, but the stock go up. You tell yourself, why? It's bad news for the company. I just read it, and I short the stock, but the stock goes up. I lose money. Why? It's just because it's not as you might think. The market is illogical. Understand that. It's illogical. If you want to make logic to the market, you will lose money. So, if you take the good thing, the good principle I give you is supply and demand. Don't bother yourself. Okay? Stock go up because someone is buying, or many people are buying. Stock go down, people are shorting the stock or selling the stock. That's it. Why do you want to know more about reasons? There is all the reasons that you might think. This is the reasons. Because if you want to get the reason, you will find hundreds of reasons online, and this and this and this and this. Okay? So don't buy a lot of expenses. Okay? Don't put a lot of expenses to your account, because they will cut your profit. It means they will take from your profit and they will add to your losses. Just these two. If you try to control these two, your account will change. What are these two that I say? Is commission, which is very, very important. Second, slippage, which is difference between bid and ask when you want to buy a stock that it is low volume. And fees, other fees, like buying the news, buying IDs, buying, I don't know what you buy from the broker. Buying training from a broker. Okay? So, whatever you want to buy. Okay? Whatever you want to buy. These are fees. And if you don't calculate these fees, you will have a problem in the future. Okay? So I just try to keep these three, which are very important. A lot of people are doing. First is commission. If your broker is asking me too much money, like $10, $7, change the broker. Because you are not trading this today and tomorrow. You will be trading for years. So he will take more and more money. When you calculate how much money your broker has taken last year, you will be astonished. What? I have given my broker $2,000 and I have only $5,000. So what is left is $3,000. So I can't make it. If the other day he will take $2,000, so 2 years you will done. You can't trade anymore. Okay? Slippage again. Try to avoid stocks with low volume, especially penny stocks and the stocks that are low volume. Okay? Try to see the bid and ask before you buy. Even if you like too much of the stock. But you should see how much you lose. If you are losing too much money, it will be a catastrophe for you. Okay? So thank you very much for watching this video. And hope if you have comments or you have other fees that I don't mention, there are a lot, but I just keep these three because it's very, very famous. Especially commission slippage. In every broker, you have these two. Okay? And all depends on you. You can control this by changing the broker and changing the stocks that you buy. Okay? It's in your hands to change and to keep expenses low. Okay? To keep the expenses low. And if you have a profit, you will see profit at the end of the year. Thank you very much for watching. If you have any question, as usual, just comment, thumb it up, or subscribe if you don't. And if you have a special request or a message, just send me a private message through YouTube or wherever. Thank you very much.